Let's now begin, guys. This is the bird eye view of advanced performance management that is in front of you. Let's begin. Your ACCA APM syllabus is divided into 4 areas, as you can see. In fact, there are 5 sections including professional marks. Okay. The first is strategic planning and control. Second is performance managed information system and development. Third is strategic performance measurement. Fourth is performance evaluation. And fifth is professional marks. So, okay. So, what we will do is that we'll go into every section one by one. We'll come back, then we'll go to the other section, then we'll come back, go to the third section, then we'll come back, go to the fourth section, then we'll come back, and then professional marks. Through this, you will get a very good idea about the entire syllabus that is covered by you through the portal if you are part of my paid batches, and it will give you a very good idea about the topics under each sections, along with that the connections between the topics. Okay, great. It will be really nice if any of you, in fact few of you, just share the message in the respective groups you are part of to join the session, and just mention that the session has started so that maximum students do join and nobody misses this opportunity. Okay. So, before I start, let's count the numbers. 10. Now, just write in the chat box. 10, 9, 8, 7, 6, 5, 3, 2, 1. So, start by mentioning 10, someone. Then the other will 9. I need synchronization. I can't see synchronization. Okay. That's it. Let's begin. Strategic planning and control. You all need to remember that you all are business consultants. And as a consultant, it is very important for you to realize this fact that the examination scenario is your client. And being the client, you are in a superior position, which means your knowledge, your understanding, and your grip over that industry is good, and you will come up with value added advice, value added recommendations, value added suggestions. So you all are consultant, and that is why whenever you read the examination scenario, you have to think like a consultant, you have to read like a consultant, you have to write answer like a consultant. Now, being a consultant, it is very important that you must realize that there are 2 important terms that you must understand, and that pertains to every organization, that is performance management and measurement. Now, what is management? This means the management of the entire business, starting from setting the objectives, understanding the mission, setting the objectives, setting up the plans, course of action, strategies to fulfill your mission and vision. So, management means it's about the entire business management. Under this comes a word which is part of management known as measurement. In measurement, what we do, you actually measure whether objectives are in line, whether CSFs are in line, whether things are in line. It's a checking activity. So once you check, you get to know the difference. Once you check, you get to know the variance. And then you do what? You come up with a plan to cover the shortcomings. You come up with a plan to cover the issues, and that is again known as performance management. Okay? So remember, you all are hybrid accountants. Now, hybrid accountant is not a traditional accountant. It's not a traditional accountant who previously was just responsible for financial numbers, who was previously responsible for preparing the budgets, who used to sit separately from the operational team. No, you are a hybrid accountant, which clearly means that your role has changed. Now, according to Burns and Scapin, your role has changed due to 3 reasons. Number 1 is simple, that is known as technology. Because of the technological advancement, your role has changed. Because of ERPs, because of SAPs, now operational managers are expected to perform work which you used to do earlier, which means these people now can do the data entry at their end, which means now you don't have to input the details of that transaction into the system. So because of the technological impact, the operational managers can perform so many operations which will free up your time. And once you will be free, you will work as part of the strategic management, you will work in line with the strategic management, you will be second to them, and you will be monitoring the performance and looking at things, whether things are going according to the organization mission and vision. The second reason which has changed your role, and that is management structure. Yes, in today's competitive environment, the management structure is believing more in delayering, which means now people should be doing multitasking, which means the operational team now will also prepare the budget and will also ensure that they fulfill the budget and control their activities, which is making budget and calculating variances is no more your work. Again, now you are free from that area, which means you can now spend time with the top management, ensuring whether things are going in line according to the organization's strategic objective, plans, mission and vision. Third is competition. Due to very severe competition, you are now required to focus on non-financial performance of the business along with the financial performance of the business. So you are responsible for both non-financial and financial performance of the business. So as I said, being a hybrid accountant, your role is now different and you are not working at the operational or tactical position. In fact, you are working with the top management and you are basically helping top management to ensure that the overall business mission, vision, objective strategies are achieved. That is why it is very important for you to understand what the term vision is. Vision means preferred picture, where you see yourself after 10 years, where you see yourself after 5 years. That is known as vision. Now, this vision will be achieved by having a well thoughtful mission. Now, what is mission? Mission indicates the purpose of the organization. It indicates the reason for existence, why organization is working, for whom organization is working. So the focus is on mission, which means mission should be so much clear that any reader will understand that organization is actually working for which type of stakeholders, whether shareholders are the priority or the customers or the employees are the priority. So having a well set, clear mission helps an organization to give message to the outside world that this is our core purpose and we exist to fulfill the needs and the demands of that particular group of stakeholder. Then comes the strategy building. Obviously, when you set up the vision, you set up the mission, you need to decide the course of action. What is your strategy? How will you achieve your strategy? So the course of action needs to be determined, which will further be split into the broad goals, which will further be split into the objectives, the quantified objectives, and which will further be broken down into CSFs, critical success factors, and key performance indicators. Now you all know that CSFs are very important as they ensure the success of the organization. Any business that wants to win, they have to make sure that they fulfill their critical success factors. These CSFs one can come up with using different sources. That is, you can build the CSF using industry. Looking at the industry, you can set up the CSFs. Secondly, you can think about the CSFs considering the company's competitive position. You can come up with CSFs considering the functional position, the temporary factors, the environmental factors. So these are the sources through which you can actually come up with critical success factors, areas in which a business should win. The second thing which is very important is KPIs, key performance indicators. It is very important to check whether you are achieving the CSFs or not. If your CSFs are not being achieved, it's useless because KPIs will check. These are basically the instrument through which you check whether CSFs are being achieved. As you need to realize, if you achieve CSFs, then your objectives will be achieved, then your goals will be achieved, then your strategy will be achieved, then your mission will be achieved, and ultimately your dream, your vision will be achieved. So KPIs, the focus of KPIs should be both on financial and non-financial indicators. So financial KPIs and non-financial KPIs will basically measure critical success factors. Having said that, now after discussing the performance hierarchy, let's look at the areas which can help a business, which can help the business performance management and measurement. And the first you have is SWOT analysis. Now what does SWOT do? SWOT helps a business to improve its management and measurement system by identifying the strength of the business. What are the business strengths, which is an internal factor. Then it helps to consider what are your weaknesses. Then again it's the internal factor. Then it focuses on the external factor. Now what are external factors? External factor means the opportunities in the market and the threats that the business is facing. Now all these four collectively gives business the idea that what are their major strengths, how they can convert their weaknesses into strength, and what opportunities are there in the market which they can use and take benefit from, and what are the threats where they need to keep a very watchful eye. So SWOT analysis in APM focuses on the impact of SWOT on business performance management and measurement. A very quick idea which is very much relevant for your examination question is you might be given with a SWOT analysis done for any business, which means now looking at the strength, weaknesses, opportunities and threats, you have to come up with a plan. How can we now capitalize on our strength? So your performance management system will basically ensure that you achieve your strengths. The business will work on achieving those strengths. Your KPIs, key performance indicators, will actually measure whether you are using your strength or not. So you need to think about the KPIs that will actually measure these strengths. Plus you need to think about the KPIs that will measure your weakness. Because if you have a weakness, it can affect the business badly. So the KPIs needs to be there to measure your weaknesses, and so that you get to know what impact they are creating. Then there should be key performance indicators to measure the threats. It's very important to measure the threats, which means these threats needs monitoring so that you are clear that these are not affecting very adversely your business operations. So SWOT analysis will help business in terms of improving its management and measurement system. For example, there is a weak IT control as mentioned as weakness for a business. So business, now what can business do? Business can improve the skills of its employees to improve the IT skills. KPIs like number of IT bugs. Number of IT bugs will indicate your weakness. The more the IT bugs, percentage of problems or number of IT bugs will indicate how severe the problem is, and it helps you to measure and come up with the corrective action. Another model that can assess business performance measurement and management is BCG metrics. What is BCG? BCG is a matrix which is used for product portfolio analysis and also for division analysis as well. As there are 4 major areas: stars, cash cows, problem childs and dogs, and you actually plot these two using 2 criteria. One is relative market share and second is market potential, market growth potential, which means that now using this matrix for a business in APM, you can use this for different sort of divisions, and this helps you to identify that what is the exact position of our division A, which may be a star, division B, which may be problem child, division C, which may be a cash cow, division D, which may be classified as a dog. Yes, in this webinar we did solve a question, if you remember, that was based on BCG matrix, but again you are not expected to perform BCG. The chances are very less. So you might be given a BCG matrix. Now you will basically use this matrix and you will improve your management and measurement, which means if a division is a cash cow division, you will build your strategy, you will make your strategy to hold that division more and more so that you can generate maximum cash. Your strategy for stars and problem child will be to build those. Your strategy for dog should be hold or divest. So what you can do, you can come up with the performance management, you can come up with the plan how to manage these divisions. And secondly, the KPIs will be designed in such a way because it will help you to make sure you use these divisions maximum. So if I say for a star or if I say for problem child, what financial KPIs will be important? So the answer is return on investment and profit, return on investment and profit based would be useful. But when I say for cash cows and dogs, the important KPIs should be cash based, like net operating cash flows, and along with that margins, profit margins and gross profit margin, net profit margins will work really well. So again, BCG matrix is a matrix that is helping assisting your management and measurement, like SWOT was doing. Similarly, the third area is Porter's generic strategies. Now, first of all, what is Porter's generic strategy? There are 2. One is the cost leadership. Number is differentiator. You want to be a cost leader or you want to be a differentiator. So now if you want to be a cost leader, so definitely the impact will be on performance management differently and measurement differently compared to if you want to be a differentiator. So for example, according to Porter's generic strategy, a business wants to gain competitive advantage using cost leadership model. Now in that case, the business performance management will definitely focus maximum on efficiency, will focus on productivity, will focus on buying and sourcing things which are cheaper, and it reduces the cost. So the focus will massively be on efficiency, the focus will be on productivity, and your performance measurement will be tailored according to that. When I say what performance measurement will do, so yes, your KPIs will be percentage idle time. For example, it would be lead time for getting the material quickly, because we need to speed up the process and make the things faster, plus percentage productivity or efficiency ratios. So your KPIs are according to that strategy. However, if you want to be a differentiator, your performance management will focus on innovation, will focus on quality production, and your KPIs would be number of innovative products, percentage of revenue from innovative products, or number of new products developed. All these will be focusing on this, plus your quality cost, that is percentage prevention cost, percentage appraisal cost, because the focus is on quality as you want to be a differentiator. So my APM consultants, RIZWAN MANIYA APM consultants, today this revision is giving you a very good clarity that these are the things that you have covered in your earlier studies, maybe SBL, maybe F1. But right now, the purpose is not to do BCG analysis. The purpose is not to do SWOT analysis. The purpose is that if these things are already done, what impact these will have on management and measurement, how you can use these analysis to improve your management of the business and measurement of the business. So this is the connection of these with management, measurement, in short with APM. Moving forward, the next is benchmarking. Now, again, benchmarking helps an organization. Again, benchmarking helps an organization to understand its position. Again, I need to tell one thing. What I'm doing here is I'm first giving you the idea about the basics of these, and then I'm connecting this with APM. Then I'm connecting this with APM, in short, with performance management and measurement. So I was saying about benchmarking. What benchmarking does? Benchmarking gives you your position. It's the audit of your own position, where you stand in the market. So what you do, you compare yourself with the best in practice. Once you compare yourself with the best in practice, then in that case, you get to know where you stand. And once you get to know where you stand, then you have to build your system, you have to improve your performance management and measurement system, and you have to work on your weaker areas. So what types of benchmarking you can do? What are the possible benchmarking? You can go with strategic benchmarking, where you can benchmark yourself with the best in practice in terms of your core business high level strategies, where you think your business overall is not going in the right direction. So you core your fundamental basics with the top in the business in terms of strategies. Second benchmarking is known as competitive benchmarking, where you benchmark your product or your service with your direct competitor. This gives you a very good chance to learn what different they are doing in a same product which you are not doing, and then you can start doing that. So this is competitive benchmarking, but once again, this is a bit difficult as competitors might not be very much happy to share information with you. Then comes the third benchmarking, known as internal benchmarking, where you benchmark your own division with your own division in a same company, which means when you benchmark division A of your company with division B of your company, so you get to know that why division B is good and what improvement you can bring in division A. This benchmarking is easier to execute, and the sharing of information will not be difficult as both are working for the same group. But what is the issue? Now, as a consultant, it is very, very, very important for you guys to actually know the positives of the benchmarking and the negatives of these each type, so that if you are required to evaluate, so you know the positive and the negative aspects. So from internal benchmarking perspective, any common problems will not be rectified. Any group common issues will continue to happen. Then comes the next benchmarking, and that is known as functional benchmarking, where you benchmark your function, one of your function like administrative department, where you benchmark your function like marketing department with the best in practice. Now that best in practice must not be from the industry, it can be outside your industry. For example, a production company marketing department, you can benchmark with a service company marketing department. So this gives you new working methods, this gives you idea about how to work out new things, but again it has a problem that whether those things are effective for our industry or not. So as a company, if you benchmark yourself, so you need to identify the benchmarking partners, so you need to decide the areas to benchmark, you need to decide the key drivers and key measures through which you will benchmark the performance. Then you compare those measures and then you get to know the areas of weaknesses. Then you come up with the plan, implement it and take benefit from that. So this is benchmarking. Now once you know where you stand, you can mold your measurement and management accordingly in order to make sure you take best out of what you have learned through benchmarking. After that, it is very important to realize that all these four models that I just mentioned, and I did mention that they will have an impact on management and measurement, which ultimately means they will have an impact on your strategy, goals, objectives, CSFs and KPIs. Your critical success factors will be dependent on that, and the measures that you will select, either financial and non-financial, will also be according to the analysis you did and what improvements you want to bring into your system. A very simple quick example again I'm giving you. For example, if you want to be a differentiator, so your critical success factors CSFs will be innovation, and to measure innovation the KPI would be number of new successful products launched. So yes, the impact will be on management, measurement, and ultimately over at all the levels here in the hierarchy till CSFs and KPIs. So I hope it is clear that how models will assess the business management and measurement. Yes guys, is this clear to all of you? What is your feedback? Is this going effective, useful? Do you like the idea? Especially the way I'm linking the things, especially the way I'm giving you the overview, and I'm trying my best to make it more and more useful in terms of examination, that how things will be tested in the paper. Okay? Great. Perfect. Okay. Now moving forward, again there are certain external factors that you have to consider as a consultant, because these external factors again plays a very important role in the business designing of performance management and measurement. You all listen to my words. This will give you lots of clarity and will give you a clear idea the difference these have compared with SBL. Okay? Okay. So external factors. There are so many factors that can affect the business. So as a consultant, we must understand those factors, and then we have to mold and change our management and measurement system. To understand the external pressures, the external factors, we have a model by the name of PESTLE or pest analysis. Pest or pestle. Normally, pest is tested more in examination, where you look at the political factors. Now, as a consultant, what you do? You look at the political factors, you look at the economical factors, you look at the social factors, you look at the technological factors. By understanding the pest, which again I think in APM you might be provided with the pest analysis, less chance that you have to do yourself. You might be provided with the pest analysis, and now considering the political impact, social impact, economical impact, technological impact, you will get to know whether these things are in favor or adverse, and according to that you will set up the system and you will set up your measurement system, management and measurement system. For example, if government is very much helpful to the local industry, and if you are a local business, this means this is a favorable factor for you. For example, government is very much helpful to the local industry and you are a foreign competitor, so this is an adverse point for you. Which means, like this, you need to understand the pressures that can have on the business. So once you understand the political, economical, social and technological factors, then you basically have to come up with a plan how to deal with these pressures. When I say how to deal with this pressure, clearly means that you need to have some strategies in place to make sure you deal with the pressures. If they are adversely, so you have to protect yourself. If they are favorably, you have to take maximum benefit from them. After political comes economical, where you look at the economical situation of that country, the interest rates, the inflation rates there, the exchange rates, the cost of borrowing, which gives you the idea how useful, helpful the economic system is. Coming towards the social factors, where you look and get into the demographics, you look at the population, what kind of population is there, what is the demographics there, and what is their income levels, which gives you the idea that whether they will take up your product or not in a favorable or adverse way. Then you go towards the technological factors, where you look at the technological general awareness there, how much competitive the environment is in terms of technology, how much technological change is needed, and you set up your performance measurement system according to that. Which means, for example, a technological based environment, your KPIs would be very much tech based, like number of new products launched by the business, percentage of income from the new products, plus time to develop the product. Now, why I'm saying time to develop the product is because the quick you develop, the better you go into the market and you take the first mover advantage. So your KPIs are according to that. Similarly, for social, again you come up with KPIs like percentage of certain population that supports your product. For economical, like cost of borrowing. For political, number of government grants. These are the KPIs that will help you to measure the force, the pressures, and according to that you can take corrective actions. The other model that helps you is Porter's 5 forces. Porter's 5 forces, which includes number 1, substitute, the power of substitute, the power of new entrants, okay, then the power of suppliers, customers, and the competition within the industry, which means these are the 5 forces that affect the business. Now, as a consultant, you must understand whether the pressure of new entrants is high or low. It's not that you have to do only, but then you have to think, okay, if it is high, so what should we do? If it is low, so what should we do? Which means if it is high, if the threat is high, which means you need to use patents. You need to use patent. Now, patent, coming up with the strategy to set up patent is the action that you are taking because of the high threat of entry. And your KPIs here would be number of patented product or percentage revenue through patented products. Now the KPI and the strategy you are making according to the pressure, whether it is high or low. Similarly, threat of substitute, if it is high pressure or high threat of substitute, in that case as well, then you come up with the plan and then you come up with the measures, like for example, customer switching cost. How quickly will they switch? This is an indicator giving you the idea about the extent of the pressure. Then if the bargaining power of customers is high, you look at the measures like number of like size of the customer, how big the customers are, and how important the product is for the customer, like percentage cost of your product in relation to the final customer product. Gives you the idea how significant that material is for the customer. Similarly, if bargaining power of supplier is high, you can use indicators very much similar to what I mentioned for customers, like number of suppliers, like amount of discount, level of discount, percentage of discount. This gives you the idea that how significant the pressure is. And competition within the industry again gives you the idea that how much pressure you are facing within the industry due to competition. So measures like market share, amount of marketing expenditure, percentage of marketing costs invested, these all gives you the idea about the extent of the pressures. So as a consultant, once you understand the pressures through PEST or Porter's 5 forces, you have to come up with a strategy to do the counter of that, and that is performance management. And then you come up with the indicators, KPIs to measure the pressure, and that is performance measurement. Moving towards the next thing, which again clearly shows that the connection of these two again will have on management and measurement, which means the impact will be on the entire performance hierarchy, that is mission, strategy, goal, objectives, KPIs, CSFs, and I gave you a few examples of KPIs, that how and what kind of KPIs will you use in that particular situation. Okay. So far you are getting a very good clarity that what impact these external pressures will bring on companies' performance management and measurement, and how these models can help you to devise a proper system. Then comes the business structures. Yes, how the business is actually structured again will have an impact on management and measurement. So if it is a functional structure, your measurement and management will be done according to functions, as the organization will be designed in different functions like marketing, production, procurement, advertisement, administration. So separate functions are there, and under these functions things are going on. Or if it is a divisional structure where the organization is divided into products, into divisions, product-based divisions, and under each division comes marketing, administration, finance for that particular product. So in case of divisional structure, your management and measurement will be according to that. Then comes network structure, that is if the organization is more like an invisible organization, which means where there is a very less physical presence, where things are all remote based. There is a massive use of information technology, information system, and organization is somewhere in clouds. Organization, real existence do not exist. Organization is all virtual remote based, where an organization does have suppliers and those are integrated to the IT system. Those organization does have customers and they are connected to companies' information system. Companies' employees are working remotely and doing the work using company's information system, which means high use of IT, less physical presence. So your performance management and measurement needs to be according to that. Now this is a bit challenging here, that for example, if it is a company that don't have physical office available, people are working remotely, customers are placing order remotely, suppliers are dispatching without any physical presence, and suppliers directly dispatch the goods to the customers and no warehouse the company has. So in that scenario, how to manage the performance of the company's employees, how to ensure employees are working or not. So you have to set up system like proper locks should be there, proper cameras should be installed everywhere at the location of the employees, and you need to measure their hours worked, how much hours they have worked, what work they have done, percentage work completed, and the measures would be according to that. Similarly, you need to also manage and measure the performance of your strategic partners, like your suppliers, like people who are working with you, like your distribution company. So you have to monitor their performance as well. Again, you need to have integrated information system. You need to have proper complaint systems available so that you get to know whether supplier has dispatched it on time or not, whether distribution company has delivered this on time or not, so that you get to know the actual customer feedback. So measures like percentage customer complaints, percentage on time deliveries will help you to manage and measure that performance. I hope this is a very excellent revision that is going on so far, just because I am linking things with actual P5 here. I'm simply focusing on how these can be examined in the examination. This overview is something which is different to entire portal content. Right now, I'm showing you from examination point of view what can come in your examination and how it will be tested. So I hope the impact of this is clear. Again, I mentioned impact will be on CSM and KPIs. You can see everything is actually connected with management measurement and with this hierarchy. Yes, my throat is not well. You can see my voice is very, it's not that much clear. It's a double voice, but I don't know. I have to take this revision. I have to make this moment useful, worth it for you people. And it's very good right now, the way the linking is being done. I'm happy. As a student, if I was at your place, this will give me lot of clarity. This will give me answers to lot of questions that were in your mind. Do you agree with me? Yes or no? Lots of hidden questions in your heart and mind, the answers you are getting today. I'm using this hot water to keep it more, smoother and clear. Okay, great. Now, moving forward, the aspect of controlling. Every business needs a proper controlling system. And again, your performance management and your measurement definitely has a very strong connection with this controlling. You control the business, you get the idea how things are moving on. So this controlling very much relates to measurement here. Now, when it comes to controlling, you use budgets. Budgets like fixed budget. This is a budget that sets the direction for the organization. This is the budget which is the first budget, you don't change it once it is made. So the purpose is to set the direction and control fixed cost. Followed by that is flexible budget, a budget that basically is a one that allows you to ensure like with like comparison to be done. Then incremental budget. Now as a consultant, it's very important that you must understand the basic feature of the budgets and their positive and negatives. Incremental budget is a budget that starts from previous period actual result, in which you just need to justify two things. Number one, inflation. Number two, known changes. Now this budget is suitable for stable conditions. This budget will bring positives like it is quick, will not take time, and you can quickly prepare the budgets in stable situation. But as a consultant, we must know the negatives as well. Like previous problems can easily be transferred into the coming budget. Plus, it results in inefficient form of budget. Uneconomic activities might continue in the future. So as a consultant, we have to weigh the usability of this one. Then comes zero-based budget. A budget that starts from a base of zero, in which everything needs to be justified right from the scratch. This budget will answer the problem what was mentioned in incremental budget about previous issues. As a budget is a budget that is prepared on the assumption that the budget is being prepared for the first time. And this budget is useful in case of not-for-profit organizations, in case of discretionary costs, as this budget provides you benefits like allocation will be very good according to the need, plus it will remove inefficiencies, plus it involves the staff, as the staff is involved in preparing decision packages. Now what is a decision package? It actually is a package that includes the purpose of the activity. Why are we doing this activity? Why we want to include this activity in the budget? Consequences of not conducting the activity. So this decision package is actually prepared by the managers, and once they prepare, they are motivated to achieve it. But as a consultant, the cons, the drawbacks of this budget is something you must keep in your mind. So the drawback, which are very important one, is time taking, time consuming. Yes, once you have so many decision packages in front of you, ranking might get difficult. You can't rank which is a better project compared to the other one, which is a better package compared to the other one. So ranking might become subjective. Then comes rolling budget, a budget that is used for uncertain situation, for dynamic situation, when things are changing really, really fast. So this is rolling budget. When exchange rate, inflation rate fluctuates very massively. So what you do, you make a 12-month plan and you divide that maybe in quarters, maybe in months, depending on the uncertainty, and you do detailed planning for the immediate quarter, for the immediate month, and less detail for the remaining quarters of the month. Once your first quarter expires, you compare that with the actual results, you get the differences, and all the differences which you as a company cannot control, which are outside your control, which are uncertainties, which have changed, which you cannot do anything about it, all those you incorporate in the coming quarters or budget to ensure that all those becomes up to date. So actually, because of so much dynamic environment, you want to make your budgeting look realistic, and that is the advantage of rolling budget. You get realistic plans, you control things on the basis of realistic plans. But as a consultant, there are drawbacks like time consuming, very much time consuming. Along with that, too much focus is on updating the budgets, which may result in less time for the managers to control actual results. Then comes the next budget known as activity-based budget. Now before I go into the details of ABB, I need to discuss the two terms that are related to ABB, and that is ABM and ABC. Starting with ABC, what is ABC? Activity-based costing is a method of absorbing overheads into product costs. It is simply a method of absorbing overhead into product cost. ABC is an alternative technique to a technique that was used in the past, in the history, and that was absorption costing. Now, ABC is an alternative approach which absorbs the overhead using cost pools, cost drivers, and the basic difference is ABC absorb overheads on the basis of production and non-production related activity level, which was not done by absorption costing in the past. So what results, what positives ABC brings to an organization? That is fair allocation of overheads, which is important for identifying the right selling price. Plus, it provides business the opportunity to reduce the overheads by controlling cost drivers. And third, it definitely is useful in machine-based environment where overheads are very significant. You need such a good technique. But yes, it does have issues which consultant must know. That is, it is time consuming. That is, you must relate cost pool with cost drivers. That is, the cost of using ABC might exceed its benefits. So what is ABC? It's an absorption technique. Through ABC, we absorb the overheads into product cost. So ABC uses cost pools and cost drivers. The other name of cost pool is known as activities. The other name of cost pool is known as activities, which means there is another technique which is known as ABM. What ABM does? ABM is a technique that manages those activities, that manages cost pools. The focus of ABM is not on cost. The focus of ABM is on the activities to see, to check, to ensure whether right activities are being used by the organization, by the products, by the services. So for that, what ABM does, it will ask 3 questions in relation to activities. Number 1, driver analysis. Number 2, activity analysis. Number 3, performance evaluation. So when I say driver analysis, it asks a simple question: why are we performing this activity? Then comes activity analysis, what activity we need to perform. Then comes performance evaluation, that how well are we performing the activity. Now, by such a thorough understanding of the activity, why we are performing, we then this then results in improvement in the decision making area. It helps in improving decisions strategically and operationally, which means it helps in a strategic ABM and operational ABM. When I say strategic ABM, it simply means that you, after looking at the activities and their consumption, you are able to decide which products to continue, which customers to continue. Because of such a thorough understanding of the activity which are used by the customers, activities which are used by the products, you exactly know that what profits you are getting from the products after the consumption of the activities, and you take decisions, should we continue with these products and customers or not. And it also helps in operational aspect, which means you figure out non-value adding activities and you remove, and your operations becomes more smoother. So this is the benefit of ABM, which simply is a technique that manages the activity. Now, what are the issues of ABM? The problem of ABM is it ignores the implicit value of an activity, the hidden value, the non-financial value. According to strategic ABM, it will ignore the fact that a product which is loss-making, strategic APM would say, close this product. Will ignore the possibility that, hello, it provides support to other products. In a supermarket, there are certain loss-making products that provides a range to the customer. So this will be ignored by strategic ABM. Operational ABM would ignore the importance of keeping a pleasant work environment. It would say that this is a unnecessary cost that you are incurring. Ignore this element, leave this issue, leave this cost. However, this will help you to recruit good, skillful people in your organization. So ABM is a method to manage the activities. ABC is a method through which you absorb the overheads using the activities, and activity-based budget basically is a budgeting method that makes budgets, that prepare budgets for these activities. It prepares budgets for these activities. It looks at the consumption required for these activities in the upcoming year according to the business production and sales. If business wants to produce 100,000 units, so considering 100,000, how many activities will be required, and then after forecasting the activity consumption, it looks at the resources. Do we have the resources available to fulfill the requirement? And then you plan how to cover up those resources and how to bring up those resources. So the planning of the activities, the budgeting of the activity consumption for the coming year is done by ABB. So if anybody wants to understand the difference between the three, so I would say keep one word in your mind, and that is activities. Let me repeat, keep one word in your mind, and that is activities. So what is absorption? Absorbing overheads through activities. What is ABM? What is ABM? What is ABM? Managing these activities is ABM. What is ABB? Preparing budgets for these activities. Awesome. See how simple, summarized I've made this. Activity is the word, and I've shown you the connections of these three with the word activity. After this, there is a concept of beyond budgeting, which is a new concept, which says that we cannot just focus on traditional short-term budgets. We have to come out of the traditional budgets. We have to think beyond budgets. We have to think at the broader perspective, the long-term perspective, because these annual budgets are like a trap. These annual budgets set annual targets, and it doesn't allow you to be flexible because you become rigid. You don't change yourself. So beyond budget says that come out of the traps of traditional budget. Think outside the budgets. Think from the long-term perspective. If you need to introduce certain resource today that will affect your short-term budgets, do it, because in long run it will benefit you. If you need to incur any expense today that will affect your short-term budget, do it, because it will improve your business long-term performance. So come out of the traditional budget, and in beyond budgeting, the focus is on decentralization. In beyond budgeting, the focus is on continuous planning. In beyond budgeting, the focus is on incremental targets, incremental rewards. There are no fixed targets or fixed rewards. So the focus is on long term. So this is how the controlling is done, which is actually part of your performance measurement. Then comes the area of business integration. Now there are certain models that gives you the idea about the business integration. There are certain models that give you the idea about how a business can improve integration, and that integration improvement will definitely have an impact on performance management and measurement. So there are certain models that work on business integration, and that integration ultimately affects the way you manage the organization. So if I start with the first one here, and that is McKinsey 7S model. Now what is McKinsey 7S model? McKinsey 7S model basically is a model that focuses on 7 factors. 3 are the hard factors, 4 are the soft factors. Now, through hard and soft factors, what is done? What is needed to be done? Now listen, for McKinsey 7S model, the first thing is shared belief. The first soft factor is shared belief. What is shared belief? I start my discussion with shared belief. Shared belief means the main core fundamental belief of the organization, which is very much related to what? The mission of the organization. Very much related to what? The vision of the organization, mission and vision. So what is your core belief, your reason for existence? for whom you exist, why you exist. So that is the shared belief. Now this shared belief will actually be connected with these next 6 factors. 3 are the hard factors and 3 are the soft factors. So according to your shared belief, your mission, your reason for existence. For example, a quick one, if you as a business wants to give best quality to your customers, best quality to your customers, it simply means that now the first hard factor, the structure of the organization, the systems in the organization, the strategy will be according to that. So let me start with the strategy. If the shared belief is customer, so your strategy will be massively focusing on customer satisfaction. The course of action, the plans will be to provide best quality to the customer. The business structure will be according to the same shared belief, that is the managers, the way it is structured, the people working on the departments, the structure will be according to that shared belief. The system, the policies, rules, regulations would be according to that. So these are the hard factors connected with shared belief. Then comes the 3 soft factors. That is, number 1, the staff that you keep in the organization, the roles that you give them, the responsibilities that you give them, the way you manage their business performance, all will be based on customer perspective. You will look their performance, that how well they have satisfied their customers. Then comes skills. The skills that you will develop in your staff will again be customer based. The trainings will be given to improve their customer managing. The trainings will be given to improve the way they deal with the customers. The training that you will give them will develop the skills which will be customer focused. The technical knowledge will be there. They will know about the product knowledge. They know how to deal with the customers. They know how to greet the customers. The skills will be according to shared belief. And your style of management, the way outside world looks at you, the way you deal with the outside world, everybody will get to know that you really mean customers. The way your customers, the way you deal with the customers, the way you provide them the service, the style of management, the culture of the organization will simply give message that customers. Such a culture should be there, that any new employee coming in the organization should clearly know on the first day that customer is the most important one for us. So that's the style of management. So guys, 7S McKinsey model definitely helps in business integration, definitely helps to make your performance management and measurement according to the shared belief. It helps to connect the other hard and soft factors around the shared belief, and your business will move in that direction. So that helps in the business integration. Then comes the other one, that is Porter's value chain. Now what is Porter's value chain? Porter's value chain again is a method of integration which focuses on total 5 primary activities. Through this you can gain competitive advantage. So those 5 primary activities include, number 1, inbound logistics. Number 2, operations. Number 3, outbound logistics. Number 4, marketing and sales. Number 5, customer support. These are the 5 primary activities. So again, if you look from the eyes of Porter's value chain, your management and measurement will get better, which means you will come up with KPIs to measure inbound logistics, like lead time, like percentage of defected raw material. These are the KPIs used for measuring inbound logistics. Then operations, percentage efficiency of the machines, percentage productivity, percentage idle time will help to measure operations. Then comes KPIs for outbound logistics, lead time, percentage on-time delivery. Then for marketing and sales, number of successful marketing campaigns, sales from marketing campaigns, amount spent on marketing campaigns. From customer support point of view, percentage queries resolved on time, percentage customer satisfaction ratio, percentage problems solved via telephone, KPIs. So this means for these 5 key primary activities, you will mold your performance measurement and management system. You will set up KPIs that will help you to measure the success of these 5, and these 5 are connected with the next secondary 4 activities. Those are procurement, means procurement for all the 5 primary activities, technological development for all the 5 primary activities, HR management for all the 5 primary activities, and general administration, which means these 4 support activities will provide support to these primary activities, and this is Porter's value chain. So I hope so far the connections are clear. Going good, guys? Yes or no? Hope you're not tired. So I hope this is different, this is unique, and this will be a game changer, honestly. Just before the exam, just imagine, just before the exam, this will be a game changer. So guys, let's start again where we left. So we had a discussion about the business integration. Now coming towards the environmental factors. Yes, environmental factors also play a very important role, and this also will have an impact on business performance management and measurement. So what are the environmental factors? You need to understand as a consultant that any client, any business that is using, that is running their operations, and that operation is affecting the business environmental factors, that needs to be considered important for the business. For example, environmental cost is usually hidden in overheads. So you as a consultant must know that what impact these costs will have on the organization's reputation. Like for example, waste disposal cost. For example, not complying with laws and regulation result in penalties and fines. So it is very important that your business must monitor the environmental factors through KPIs, key performance indicators, number of environmental complaints, number of penalties, number of fines, percentage of carbon immersion. These are the things, these are the measures that are useful to measure the environmental consequence. There are 4 methods through which we account for the environmental cost. The first is input and output analysis, which says what comes in must go out. It's a reconciliation between input and outputs. Then comes flow cost accounting, which is a method in which you use the entire organizational structure. You use the organizational structure for that, and it shows you the flow of the material throughout the organization, and it shows you the material, the units that are good units that are eventually transferred to the customers, delivered to the customers, and the goods material which is considered as disposal, and then you dispose of. So flow cost accounting shows you the entire material flow. Then comes ABC with environmental accounting. So what is the connection? The connection is when ABC breaks the overheads into cost pools and cost drivers, so there should be environmental cost pool as well, because we know environmental cost is generally hidden in overheads, and when you break overheads into cost pool, so there will be some amount of environmental costs that will have a specific environmental cost pool, and if you determine their cost drivers, so that This is how you can control the environmental costs. Then environmental costs with life cycle costing says that in life cycle costing, the basic principle is we have to track and accumulate the entire life cycle cost and revenues. So it should also estimate the environmental costs coming in the future years in form of decommissioning costs, in form of waste disposal costs must also be considered in environmental accounting, life cycle costing. So this is environmental factors. Then comes the stakeholder factors, which is measured by stakeholder metrics. Again, your performance management and measurement will be according to the primary group of stakeholders. So you can use Mendelov stakeholder metrics. On the basis of power and interest, you determine the different group of stakeholders that require minimal effort, that are key players for your organization, that needs to be kept informed, that needs to be kept satisfied. So based on this Mendelov matrix, it gives you the idea about how important a group of stakeholders are, and once you know, then you obviously manage the relationship with them. You obviously do set up your system and measurement criteria to ensure that these are kept satisfied, these are the key players, these are kept informed. So this also has an impact on your performance management and measurement. Then the impact of risk and uncertainty. Definitely at this strategic planning level, it is important to know the risk factors that the business is facing, the uncertainty that the business is facing. So you must know what risk is. A situation in which you are given with probabilities. A situation in which you don't have probabilities is known as uncertain situation. So under this risk and uncertainty, the company can respond to these using different risk attitude. Maybe if you are a risk seeker, your attitude would be different. If you're risk averse, your attitude would be different. If you are a sore loser, your attitude will be different, which means the risk and uncertainty is something which is important to consider as a consultant, and different risk attitude people will react to this differently. Then you have BPR, business process re-engineering. Business process re-engineering means what? Fundamental rethinking, radical redesigning of the business processes. A method through which we bring massive change into the business structure, massive change into the business process. A method through which we bring total new massive change into the business system. It's a big bang change, and this definitely requires change in the way you manage the performance, you measure the performance. This means, for example, going towards an IT system from manual book accounting is a BPR example. Now your focus will be on your new IT sophisticated system using SAP and ERPs instead of the manual book accounting is example of BPR. Now, if you are switching to SAP or ERPs, your performance management would be different. The way you measure the things would be different. So again, business process re-engineering is a tool that helps business to bring massive changes. But yes, the change is not important only. We as a consultant must know that what impact this can have on the business performance management and measurement. Plus, is it worth it for an organization to go with such a change? What are the costs associated with that? What are the benefits that the business will get at the end of the day? So guys, you can see these are the different areas that are connected to strategic planning and control that we have covered, which is a core area of your syllabus, which is a very major area of your syllabus, and this is known as strategic planning and control. Now, moving towards the second area, and the name is performance management, information system developments in technology. Again, the connection is with performance management and measurement. again the focus is on performance management and measurement. As a consultant, again we must know what impact this information technology development in technology will have on the business performance management and measurement. Let's start with the first one. The first new development is RFID, radio frequency identification devices. These are the chips inserted in multiple things like your SIMs, like your identity cards. These are used in your inventory controlling, managing the inventory. So these RFIDs are used by businesses. For example, a manufacturing company having huge amount of inventory is using RFIDs. Chips are actually inserted in the inventory, and through the terminals, the detectors, they detect the signals, they get the signals, and they track the location of the inventory, they track the location of the equipments, and through this you manage the inventory. It helps you to bring real-time change. Now, as a consultant, what is important for you to learn from examination perspective is that what RFID will do for a business. So listen, my basic advice for almost all the techniques that we'll cover here is that when any question requires you to evaluate the suitability of the new technology, of the new method of working, new IT system change, always try to figure out the current problems in the organization, what current issues they are facing right now. For example, poor inventory management. For example, they cannot locate their inventory timely. There is no real-time change in the inventory data management. So these are the problems. So once you identify the problems given in the scenario, then you can simply say bringing RFID into the system will help to ensure real-time inventory updates. It will help to ensure real-time location tracking of the inventory. It helps to ensure identifying the expiry of the inventory. So this is how you will be tested in your examination, that okay, just check the suitability of a particular thing. So you needs to find out the problems in the scenario and then mention this will be overcome by this. Along with that, also consider the negative aspects as well. Now, what are the negative aspects? What are the negative pointers? What are the negative things? Like RFID has a cost of hardware and software. For that, you need to have proper hardware and software in place, which again is a cost. Plus, you need to ensure maintenance of these hardwares on a regular basis. Again, that is a cost. So these are the cost of these, and this will be outweighed against the benefits that the business gets, and this is how you evaluate. So I gave you the idea that this is the mindset you have to keep when it comes to different technology options, like for example data mining and data warehouse. So what is data warehouse? Basically, it's a warehouse of the data where entire organization data is kept in that data warehouse, including the data of marketing, administration, finance, you name it, all the data is kept in a data warehouse. So again, data warehouse is basically crucial for the organization, and it is very important that we as a company must realize that any company having such confidential data, you must be able to have proper preventative measures for that. So data warehouse is a place where data is kept that relates to the entire organization. Then data mining. Now what data mining does? This helps in improving the business strategies. This helps in improving the business. A software that finds out the hidden patterns in the data. A software that helps to find out hidden relationship between the data. When you run these softwares into data warehouse, because data warehouse includes high amount of data, these mining softwares can find out hidden patterns, hidden relationship between the data, and this helps you to understand the relationship and take a decision and improve the business profits, come up with decisions. So this is the benefit of data mining. Then a term known as Internet of Things, IoT, very common in today's world. We have seen things that basically are related to IoT, which means in today's advanced world, you have seen the equipments, the things are connected through internet, through signals, and those are basically automated ones. For example, you can just take the name of Alexa. Now, it's a very common thing that things are connected and how it operates automatically. So you go to your home, you just say, Alexa, open AC. Now AC, that is starts giving you, it starts again. Then you say, Alexa, shut off the lights. The lights, it will be complete dark, the lights will go off, which means this is Internet of Things, which means things are connected, the equipments are connected, and through the signals, we control the equipments, through the sensors we control the equipments, and this is another advancement in the technology. Then there is a term cloud computing, which basically means an organization do keep lot of high amount of data in the clouds. Now, what do you mean by clouds? Your Google Drive, your Gmail, emails, all are kept in clouds. So what is cloud computing? This is a very new advancement, as the organization do store high amount of data in clouds. So again, you must keep in your mind what are the precautionary measures you have to take, how to protect that, what are the benefits, what are the issues, problems of that. Again, the cost would be there for cloud computing, definitely the storage costs and all. Security would be an issue, but at the same time it gives you flexibility. You can access the data anywhere in the world without hesitation. You don't need to keep those big drives with you in your hand, no USBs, no hard drives, you can access the data. So this is cloud computing. Then process automation, another term. The processes in manufacturing businesses have now become automated, especially in car industry, automobile industry, where the assembly of the car is very much done automatedly. 95%, 90%, 85% there is automation, where robots are working and doing the assembly of the car. Not only automobile industry, also if you take example about the car servicing companies, now the car service is being done automatedly, which means you just go there, select the type of valet you want, and the car will be washed accordingly and you don't have to do anything. This is process automation. Then comes the term customer relationship management, known as CRMs. CRMs basically are used to manage relationship with the customers. You basically acquire customers and you retain the customers. So CRM helps you in acquiring new customers, sending them the timely deals, sending them timely discount offers, sending them timely emails about new policies and discounts. At the same time, helping existing customers, solving their queries, helping them quickly solve their problems. This is customer retention. So CRM is useful in acquiring and retaining the customers. Then comes big data, very famous concept. Huge amount of data is collected by these huge giants like Facebook, like Twitter, like Instagram, like Google. Google is basically a big giant that collects huge amount of data. So what is big data? Big data is a data that Google has that relates to the entire billions of the people, my data, your data, location, age, interest, so many things we mention in our Google, and they have that data. So this data basically has certain characteristics like volume. It includes high volume, high amount of data. Number two, the variety is very much in this data. Obviously, different type of data Google has about people, their interests, their behaviors, their relationships, their age and everything. Then velocity, how quickly we use the data for decision making purpose, how quickly this data is used for taking decisions. Like I always give a very common example. Even you want to test it today, you just open any a mobile phone application like booking.com and you just search any rooms there, you search any apartments if you want to go somewhere later on for a foreign trip or vacations. And once you do that, once you close that and then you go to your social media account, you will see ads coming up related to that, which is basically a simple velocity, how quickly the data is being used for taking decisions and giving deals to the customers so that customer can take decisions. Then comes veracity, which basically means the accuracy of the data, how much accurate the data is. So big data again plays a very massive role in today's IT world, and managing this is very important. After that, we have unified corporate databases like ERPs, SAPs. These are the softwares that are simply used for integrating the entire organization operation, like your marketing, like your production, like your administration, like your procurement. You connect entire operations through one software known as enterprise resource planning. Now what they do, if you input any details from a marketing department, so the change will be everywhere. If any person sitting in any outlet inputs any sales transaction, so the inventory is updated throughout the organization. This is ERPs. Not only this, through ERPs, the ERPs are used for sending a message to the suppliers when reorder is required. When the inventory goes at a certain below level, automatic message is given to the supplier who can reimburse the inventory. It is not useful internally, but externally you can connect your strategic partners, your suppliers or distributors through your ERP systems. So again, you can see here, these are the new developments in inventory, technology that all will have an impact on the business performance management and measurement. Then we have another concept, and that is of lean management. What is lean management? The organization should become more leaner. The organization should remove non-value adding activities. The organization should make things more smoother. So we have a model by the name of 5S model, which helps an organization to become more leaner, more simple, more smoother. And that 5S model comprises of 5S. One is structurize, systemize, sanitize, standardize, and sustain. Now what is structurize? You sort out the things. For example, if you have inventory in your warehouse, you sort out the inventory well. Proper sorting of inventory needs to be done. Then systemize. Keep inventory in such a way that is easy to use. Easy to use things are kept in front so that you use them very quickly. Inventory that are more frequently sold, keep them in front. That is systemize. Then comes sanitize. Every time on a regular basis, keep the things clean, keep the things in proper order so that there is no issue again. So sanitize means things should be kept clean so that there is no disturbance later on. Then standardize, make a procedure, make policies so that everybody should follow that policy and keep things sorted and keep things according to the system and keep sanitization. So standardize means there should be policies to ensure all the above three things. And then comes sustain. Make sure we follow this on a continuous basis. Make sure we monitor this on a continuous basis and ensure that things are done in the same way. So it helps in managing inventory. It helps in managing your data, the information, the data. You can manage data of your organization according to the model known as 5S. So this is 5S model. Okay guys, great. Let's now begin with the revision again. Now, let's first discuss integrated reporting, the concept of integrated reporting, which is very important, but I'll come to this later on. I just first want to complete that IT area. New topics, new concepts have been introduced in APM. And as I was mentioning, the 3 webinars of September, day 1, day 2, and day 3. On that day 3, I've covered these. So I hope you all have gone through this earlier. Now, the term data silos. The term data silos means that the storage of information is controlled by one department, okay, which means data is kept and only one department is controlling that data, which is not shared to the organization. This is known as data silos. Second, you have the data analytics, the concept of data analytics. Now, what is data analytics? Data analytics means the process of collecting and examining data, and this helps in getting insight from that data. So there are different methods to do this. One is known as descriptive data analysis, which means you look into the data to find what has happened. Then you have the diagnostic data analysis. You look into the data to see why something has happened. And then you have predictive data analysis, where you dig into the data and you predict the future trend, what will happen in future. So it's like what has happened, why it has happened, and then you predict into the future. That is predictive data analytics. So the alternatives to that now, includes other methods of data analytics known as text analytics, where you use a machine and that reads the message. You have image analytics, where again the machine actually basically analyzes and gives you the idea about the image, what kind of image is that. And then you have video and voice analytics. Again, that machine reads the message and the video, and what message is giving, what message the video or the voice is giving. And then sentiment analysis means that machine reads the text and tells you the mode and the emotion behind the text. So that is sentiment analytics. Now, these are the things which are very common in today's world, and yes, very much different. And again, these are the technology advancements which again affect the organization performance management and measurement area. Now, coming towards the integrated reporting concept, which is what? Traditionally, the reporting was done over the financial statements, over the financial numbers, which is a traditional way of reporting on P&L, balance sheet, cash flows. The concept of integrated reporting is a one which says that it is very important to give clear message to the stakeholders regarding so many different areas of the business. Starting with the first one is organization overview. We must, in our financial statements, we must in our annual review statements, we must give message to the stakeholders about the organization overview. What is the mission of the organization? The main purpose, the reason for existence, why the organization is there. So you must give overview to your stakeholders about your mission, your reason for existence, and what is the core work of the organization. Okay. Then you must communicate with them the risk and opportunities in the market. What risk the business is facing in the market, the risk faced by the organization. So different techniques will help you to measure the risk, like SWOT analysis can help you in identifying the risk, the threats. Different techniques like methods like Maximax, Maximum, Minimax, regret rules and expected values will be used in dealing with this risk and uncertainties. Plus, you look at the opportunities. Again, as I SWOT will work here. So opportunities, what opportunities the business have and how they intend to cash on those opportunities. Third, you must communicate the strategy and your resource allocation. What strategy the business wants to follow. Are we following competitive strategy? Are we following differentiator strategy? Are we following cost leadership strategy? So you must communicate that. And how are you doing your resource allocation? How we plan to use the resources of the organization. Then what is the business model? What business model the company is following? We have to give message to the stakeholder, the way we operate and the model that we follow. Then the performance of the organization, we have to give message in relation to financial as well as non-financial. It's not that we just focus on non-financials only and not focus on non-financials. We have to report to the stakeholders how non-financially we have performed. Then the future outlook of the organization, that we as a company, what we think, what future the business has, how we'll be able to grow the business in the future, considering the opportunities, threats and everything. So what is the future of the organization, how we intend to capitalize on the things. Our future outlook means our future plans, how we want to grab the future opportunities. So integrated reporting is a concept that gives a clear message that reporting should not just be financial. We have to communicate to stakeholders about different aspects of the business. So this is our second section, performance management and IT developments. Now moving towards strategic performance measurement area. What is strategic performance measurement area? Again, the impact on performance management and measurement will be seen here. Let's begin first with measurement area. We have talked about the assessing performance of the organization. We must have KPIs in place. Now I'm discussing those KPIs in a detailed way. First is the financial aspect of that KPI. So we have to measure the performance of a private sector organization through the measures which are more financial ones, like gross profit margin, operating profit margin, ROS, ROI, EPS, EBITDA, earning before interest, tax, depreciation and amortization. This is a measure which is used mainly when managers do not have control over acquisitions and they don't take decisions in terms of borrowing and the loans that the business wants. So EBITDA is a measure which is basically removing the impact of depreciation, amortization, interest and taxation, and it is a substitute of cash flow which gives you the idea about the business operations, how good they are going. Then residual income, NPV, IRR, MIRR, modified internal rate of return, which is a cosmetic rearrangement of NPV. MIRR overcomes the flaws of IRR, that is MIRR is useful in case of non-conventional projects. MIRR is useful when there are different interest rates. MIRR is useful again where we have to assume that reinvestment is made at cost of capital and not at IRR. Then we have economic value added, known as EVA, which is a very good measure for shareholder wealth creation. And when I say EVA, so we must be able to recall that there are certain reasons why we work out EVA, because we want to convert accrual accounting into cash accounting. Plus, when we want to capitalize the market building items, we go with EVA. So economic value added, there are two important terms. One is the accounting profit and accounting capital employed. Now what we do, we convert accounting profits into economic profits. We convert accounting capital employed into economic capital employed. Now, there are approximately 160 adjustments, but obviously we don't have to do all in the examination. But we must know that there are two methods to work out net operating profit. And what is that? How can you work out NOPAT? The method to that is we can either start with profit before interest and tax, known as operating profit or PBIT, or we can start with profit after tax. Now, what is the major difference between these two approaches? And that is of interest and taxation. Interest and taxation. So you need to remember that interest is obviously tax allowable. So we have to take the impact of tax allowable interest and secondly, we also have to adjust the impact of deferred taxation. So if I start with operating profit, obviously I don't have to take interest in that. I don't have to definitely consider the provisions of taxation. I will simply use cash tax in that case, okay. If I start with the profit after tax, so I will add back the interest net of tax, and also I will incorporate the deferred tax impact so that my taxation from accounting converts and gets back to the cash tax. Then from economic capital employed point of view, it is all very important to remember the by default assumption that the capital employed that we use is of start of the year. So anything that I add back in my profits to convert accounting to economic profits will not be added back in case of capital employed, because whatever I add back relates to that particular current year, which is not part of the opening capital employed. So in capital employed, I need to add back prior year non-cash flow items, prior year provisions, prior year adjustment need to be done. I need to capitalize prior year depreciation that I've depreciated. So all the prior year things will be adjusted in capital employed, but not the current year. It is very important to understand the concept of depreciation in EVA, which doesn't believe in accounting depreciation but believes in economic depreciation. Now, what is economic depreciation? The real fall in the value of the asset. This is economic depreciation. So we work out NOPAT, we work out economic capital employed, then we use weighted average cost of capital, which includes the impact of equity costs and debt costs, and then we work out EVA. If the answer of the EVA is positive, it means the business is creating the value for the shareholders. However, if it is negative, the value is being destroyed. So EVA is a very, very, very good measure for shareholder value creation, and along with total shareholder return, TSR as well. So when the question says ROS or EVA, so EVA for shareholder. When the question says ROS or TSR for shareholder, so it's TSR for shareholders, because these are the one that will measure the wealth creation for the shareholders along with NPV as well. So when we are assessing the performance financially, these are the financial measures that we can use for the company as a whole, even for divisions. Now going into the divisions, now moving towards not-for-profit organization, any profit oriented, yes, these are the things that we have to use. If a business is a not-for-profit business, if a business that is a one that doesn't exist to earn profits, is a not-for-profit organization, so the performance will be measured by 3 E's, which is known as value for money: economy, efficiency, and effectiveness. What is an economy? Economy is an input measure which measures whatever input you do should be the cheapest possible for the required quality. Then comes efficiency. What it measures? It's an input to output measure. It measures, that is, whatever input you have done, you should get maximum output from that. Then comes effectiveness, which is a measure which looks whatever outcomes you have, whatever output you have, it should be objective oriented, it should achieve the objectives. So for not-for-profit organization, we will use VFM, economy, efficiency, and effectiveness to measure, and we must know how to develop the KPIs of that. For economy, the KPI would be cost of input resource divided by, cost divided by input resource. When it comes to efficiency, the measure that we will come up with is output divided by input. For effectiveness, we will come up with measure according to the scenario, what objectives the business has, and we'll measure those objectives. Okay. Now coming towards another very good option to assess the performance of not-for-profit organization, and that is through league tables. Now what league tables are? League table is like a point table which is used in football, in cricket. Very much famous football World Cup is starting as well, so I'm sure you are excited. So yes, league tables are basically point tables where you see Brazil, Germany, Argentina, and you see the teams, the matches they have played, the matches they won, and their run rate. So this league table gives you the clarity who is best, who is worst, and how you need to improve from worst to best. Again, such league tables are used for assessing the performance of any not-for-profit organizations as well. You can use league table to actually see which company is performing better, which is not performing better. It gives companies the idea themselves that, okay, this is how we can improve ourselves, this is how we can improve our results, and to become the best, this is what we need to do. So league table is used for actually evaluating the performance of different not-for-profit organizations. But the problem with the league table is that yes, it will motivate, yes, it gives you the idea who is best and worst, but the problem is of what gets measured gets done. What gets measured gets done means that looking at the league table, the company will only focus on those areas that are being measured by the league table, and will only try to improve that area, will only try to show favorable performance in that area that is being measured. So this is the problem with league table. Again, as a consultant, we must know the positives and the negatives of using league table for an organization. Having said that, then comes the assessment of the performance of the company in terms of its divisions. A company might be a one where there are different divisions working, so you have to assess the performance of different divisions. Now, measures which are purely used for assessing the divisions includes ROI. Now, ROI being a relative measure is useful for comparing different size divisions. But for assessing manager performance, ROI is not useful as it encourages dysfunctional behavior. So the other measure we have is RI, which is an absolute measure but not useful for assessing different size divisions. But for assessing the performance of the manager, RI is better than ROI, plus RI has a better correlation with shareholder value than ROI because RI uses notional charge on capital. But when I say economic value added is the best when it comes to shareholder value creation, as EVA converts accounting profits into economic profits and capital employed. Then you must understand the impact of transfer pricing issues as well. And when I say transfer pricing, what it means that as an organization, we need to understand that yes, any division that is doing trading with the other division, they will give rise to transfer pricing problems. This will give rise to transfer pricing issues. Now, transfer price is a selling price for the seller and it's a cost for the buyer. So how to determine the best transfer price? One is general rule. This is the best rule you have. This is the rule that results theoretically in the best transfer price. The rule is marginal cost plus opportunity cost. But coming towards the practical transfer prices, the first is market price. Nobody has objection to this, neither the seller, neither the buyer. But it will not be useful in case of monopoly or where the market doesn't exist. Other option to this is adjusted market price, which means in the market price may incorporate the savings that a division seller will benefit from by transferring internally to the buyer. So this is adjusted market price, which means from market price we deduct the internal cost savings. The other options are cost-based ones like variable costs, standard variable costs, total cost of the seller, standard total cost of the seller, and total cost plus profit. In fact, the best is total cost plus profit, which gives seller the motivation to earn the profits. So this is how we set different sort of transfer prices. You as a consultant must know the positives and negatives of these transfer price options to evaluate whether it is useful for the business or not. So as I say that yes, transfer pricing and the positive and the negatives is something that you should know. Plus you also need to have the idea about international transfer pricing, which means if there are divisions operating in different countries, so what impact you need to consider in transfer price. So the first one is the exchange impact, exchange rate impact. Yes, exchange rate can have an impact on your transfer pricing. fluctuated, if there is a massive fluctuating exchange rate, your transfer price and setting of the transfer price gets affected. Second is the taxation loss. Yes, transfer pricing, deliberate underpricing or overcharging means you are doing this to evade the tax, and tax authorities can grab you in that case. So you must have the consideration of taxation as well. Then import tariffs is what you need to consider again when it comes to transfer pricing, and you also consider any control limitations on remittance when you're setting international transfer pricing, because through transfer price you can manage taxation, import duty impact, exchange rate impact, and remittance control impact. So after this, we need to understand the concept of quality. Yes, the quality plays a very massive role in organization success, in organization performance management and measurement. So there are certain approaches like JIT. Now JIT is a philosophy which says that the company should not keep any sort of raw WIP finished goods. When customer places the order, that is where you use JIT procurement. You buy from the supplier and then you go towards JIT production, you produce the goods quickly. So from performance management and measurement perspective, it is important for you to understand as a consultant that any business that uses JIT, you need to have good performance measurement system in place for that. Like for example, the KPIs. You must know the KPIs useful in case of JIT, like lead time. It gives you the idea about how quickly supplier delivering us and we are delivering to the customer, plus percentage idle time, what is the stoppage time in the organization, plus number of defected raw material or final product, gives you the idea how smooth or the process is not smooth in that case. So the KPIs, the understanding of the KPIs for this system is very important. Then TQM works along with JIT. When I say JIT, TQM is running behind them. TQM is a philosophy of total quality management, which says that there should be zero defect. The focus should be on continuous improvement. It says that in TQM, it says that the focus should be on continuous improvement. Zero defect policy should be there. There should be no quality loopholes. Things should not be defected at all. So for JIT, TQM is very important to ensure smooth running of the business. Then comes target costing, a technique which says that at the development phase, we need to set up the target price, we need to set up the market price by conducting market survey, then we need to establish the target cost, and then we need to reduce the cost gap by comparing target cost with the estimated cost. So once we have the cost gap, we think about the ways how to reduce the cost gap, and all this is done at the development phase. When the product has not been launched in the market, that's development phase. So target costing is a technique that helps you to reduce costs in the development phase, yes, considering quality. Then comes Kaizen costing, a technique that focuses on continuous reduction, that focuses on cost reduction when the product has passed from the development phase and now is in production phase. So this is the technique that believes in reducing cost when the product is in production phase. And how it does is by continuous improvement at all the levels. It says to remove wastage from all the levels, and it focuses on scrutinizing the standards. It focuses on tightening up the standards. It says that if you tighten your standards, so automatically your actual performance will be better. So the focus here is not on the actual performance improvement. In fact, it focuses on scrutinizing, tightening your standards. The tighter the standards will be, the better will be your actual result. So Kaizen is an alternative technique compared to standard costing, and Kaizen standard costing are totally vice versa to each other, where standard costing focuses on annual standard, Kaizen focuses on monthly standard. Where standard costing blames employees for adverse variances, Kaizen costing takes the input of the employees and consider employee as a source of improvement. So Kaizen costing focuses on a variance, which means target reduction versus actual reduction, whereas standard costing focuses on a variance comparison between target and actual. So the focus in Kaizen is on the target reduction compared with actual reduction, which means the focus is on tightening the standards, improving the standards, and then seeing how much improvement is in the actual results. So Kaizen versus standard costing. Kaizen is an approach that focuses on monthly targets, not periodic targets. Then we have an approach by the name of Six Sigma, which basically is a quality practice that allows that yes, variations and deviations will be there in the quality of the products. As TQM says zero defect, Six Sigma says this is not possible. You cannot produce a zero defected product. Yes, there will be deviations, and that is known as Six Sigma, 6 deviations. So Six Sigma is a quality philosophy which is used, applied on a continuous process, on a process that is an ongoing one, and through this you can bring improvement. Plus it is also useful to develop a new process. So once I use Six Sigma on an ongoing process, so I will use approach known as DMAC. That is, I will define the problem in the process, I will measure the problem, I will analyze the root cause of that problem, will drill down, look at the root cause, will come up with the improvements, and will implement that, and will control it to continuously monitor it, things are within control or not. But when I feel like I cannot use my existing process, so what I do, I use the approach similar to DMAT with a small change, and that is I define the problem, I measure the problem, I will look at the root cause of the problem, and instead of changing the current process, I will develop, define new process, and will verify it. So in order to bring quality changes, you can use Six Sigma methodology, as this will improve customer satisfaction, will improve the quality of the process, and definitely this will be useful in improving overall business performance. So these are the quality practices that you need to understand. But now what is the cost of quality? So you need to understand that cost of quality is divided into two groups. One is conformance, second is non-conformance. When I say conformance, it includes two things. Number one, that is preventative cost and appraisal cost. Prevention means that you incur cost on activities that prevents the error from arising at first place, like process, like training cost. Appraisal cost means cost incurred on activities that will ensure that you detect the errors, like supervisor inspection. Then comes non-conformance cost. Number one, internal failure cost means the defected products identified by the appraisal system is known as internal failure cost. All the defected units are your internal failure. So you rework and you improve them. That is internal failure cost. The best thing about this is these were not transferred to the customers, but any goods that were not detected by your appraisal system and were transferred to the customer are known as external failure costs, and this includes the reputational cost, that includes the loss of goodwill, and also the rework that you need to do for the customers and the warranty claims. So this is known as external failure cost. So as a consultant, we must know the organization should always focus on conformance more compared to non-conformance. If we focus more on prevention and focus more on prevention means we need to have less appraisal, less internal failure, and less will be the external failure. So this is the focus of quality in performance management and measurement. Moving towards human resource management. Yes, this is also very important area to measure the human element of the organization. Yes, it's very important that people are one of the most important assets for the organization. Keeping them motivated, good packages, good salaries is very important. So the salaries should be according to market condition. It should be one that motivates them, and the packages should be connected with the rewards. So at the end of the day, it is important that we need to assess the performance of the human working in the organization. So how would we do? We need to appraise their performance. So it says appraisal is important, but appraisal should be a constructive exercise. Appraisal should not be seen as an exercise of blaming the labor. Appraisal should not be a one-off exercise. Appraisal should not be considered as an annual event. Appraisal should bring positive changes. The employees should know that this appraisal is for their betterment, but not to judge them, not to give the judgment about their performance. So when we are appraising, taking accountability from the labor, so there are three schools of thoughts. One is budget constraint style, where the focus is on short-term numbers, where the focus is on short-term targets, where we focus on measuring the short-term numbers and we judge if they have achieved the short-term budget targets or not. The other approach is a profit-conscious style, where the focus again is on financial, but not on short-term financial numbers, but the focus is on long-term financial numbers. So we see whether long-term numbers are good or not. Third is non-accounting style, where we judge the performance of the employees on the basis of non-financial areas. We look at the non-financial aspects, what non-financial things they have done better, and we judge according to them. And then we come up with the plans. So yes, appraisal is important, but it should be constructive and useful. So this was the impact of human resource in performance management and measurement. Having said that, now we are moving towards the area of performance evaluation. Now this is the area where we will be looking at the different models that are very useful for the organization performance measurement. Starting with the first one is balanced scorecard. This alternative view of balanced scorecard focuses on measuring the business performance financially and non-financially. We as a consultant, we know the importance of financial and non-financials at the same time. So balanced scorecard is a model developed by Dr. Kaplan and Norton, which focuses on 4 areas which are important for the organization success. This model is a one which says that if you want to develop any performance management system or measurement system, balanced scorecard will give you a complete view of financial and non-financial, internal and external factors. So it helps you to achieve your vision as you focus on 4 areas. Number 1 is financial perspective, where the focus is on shareholder wealth, where the focus is on managing and ensuring maximizing of shareholder wealth. So you set your goals and KPIs according to financial. Second is the customer perspective, where the focus is on customer satisfaction, where you focus on measuring customer success, customer satisfaction. So your CSFs and KPIs are according to that. Then comes internal perspective, where you measure the internal speed of the organization, where you measure the internal speed of the organization, how fast the systems are going on. And then comes the fourth one, innovation and learning perspective, which clearly means that how well we are innovating ourselves for the future, how well we are learning for the future. So it improves the skills of business innovation and learning skills. So balanced scorecard is a model that ensures balance between financial and non-financial. So you will use here KPIs which are non-financial, like percentage customer returns, percentage of positive feedback, percentage system downtime, percentage labor turnover, percentage of income from new products, number of new products sold, time taking to develop the product. So here the focus will be on both financial and non-financial. So balanced scorecard is useful when you're making your performance management system and when you're measuring the performance of an organization both. If you want to set up the KPIs, you can use balanced scorecard perspective. If you want to check the performance of the organization, so you can use the KPIs to measure using balanced scorecard. Now, balanced scorecard steps includes develop the strategy, then define the measures, select the measures, then define the measures and redefine it, and then deal with the people. So you start with strategy. You should know what the strategy is. According to that, you set up the KPIs, then you define those into your system, and then you deal with the people. You tell them what is the purpose of that. You give them the confidence that all these things are basically for your own betterment. But there are certain drawbacks of balanced scorecard which means selection of measures is difficult, because if we are selecting measures that are creating conflict between the performance, that's bad. Which means if I focus on customer satisfaction by improving the quality, at the same time I am having a negative impact on my financial results, my financial KPIs will show bad performance. So selection of measures is important, and it should not create conflict between the measure itself. Then the commitment of the senior management is not very much towards non-financial. Plus, people don't understand what non-financial measures are giving you the message. So the interpretation issues also lie with these balance scorecard. On the other hand, the other model that we can use to measure or manage the performance of a service business is known as building block model. Now, building block model is divided into 3 blocks. Starting with the first one is dimension, second is standard, third is rewards. So when I say dimensions, so there are 6 things that we focus on when we are measuring the performance of a service business. The first is financial performance, then competitiveness, then quality, then flexibility, then innovation, and then resource utilization. So whenever you have to assess the performance of a service business, you must consider these 6 dimensions. Remember, the first 2 are resultants and the next 4 are determinants. What determinants do? Determinants will determine whether determinants will determine whether resultants are going right or wrong. Which means if you innovate, which means if you ensure flexibility, which means if you go with proper resource utilization, which means if you provide good quality, so you will be competing good in the market. Your competitiveness, your market share, your sales growth will be there, and your financial results, your GP margin, your profit margin, your sales will also increase, which means your financial numbers and your competitiveness will be improved. So you have to ensure quality by using KPIs of quality like percentage customer returns. You have to ensure resource utilization by using KPIs like number of trainees at particular client, number of partners at particular client. You need to ensure flexibility by looking at measures like percentage on-time delivery. You have to ensure innovation by looking number of new services launched and income from new services. If these KPIs, you keep an eye on them, these helps to definitely ensure success for a service business. Then comes the second block, which says that the KPIs that you are using for measuring the dimension, for those KPIs, set the targets, set the standards, set the plans, set the targets, set the standards. So when you are setting targets, standards for these KPIs, you have to keep in mind 3 things. Number 1, people should take ownership of them. Number 2, these should be on a fair basis. Number 3, people should consider these as achievable. These should be considered as achievable. So these are standards, these are targets. And then to motivate people to achieve those KPI targets and standards, you should give them rewards, the third block. So this reward is a one that says that when you're setting rewards, you have to make sure that people should be motivated by those rewards, which means rewards should be motivating one. Plus these rewards should be clear when and why they will be rewarded. Third, you need to consider the aspect of controllability, that people will be rewarded over factors which are under their control. So this is building block model, 3 blocks. Guys, everything is going okay? Come on, what is your feedback? You can seriously see the level of effort needed. And I am sure this revision is giving you a very good chance to recall the content that was available or is available on the portal. What do you think? Yes or no? It will definitely help you to relate things with the content that is available on the portal. In fact, those who are part of my APM batch, I'm sure by this live session based on Glassboard, you are able to recall the Glassboard recorded videos as well. It is giving you some idea of the videos, remember? Yes, Abu Bakr, this will be uploaded on our YouTube channel and also on our paid portal. Don't worry. And this revision will help you, especially one day before your examination. Just imagine how useful this will be. Do refer this to your friends as well to watch maximum so that everybody gets an idea what APM is. Okay, WhatsApp group link you need at the end of the session. In fact, you can see the number right at the top. See the number here. Just WhatsApp me and I will share the link of the group, the general group, okay? Right. Let's further continue. The next model is performance pyramid. Very useful one. Performance pyramid is a one that considers the hierarchy of the organization, strategic level, tactical level, and operational level. So in pyramid, we start with vision, level 1. We break that into level 2, market and financials. We further break that into level 3, customer, flexibility, productivity. We further break that into level 4, quality, delivery, cycle time and waste. Now if we achieve level 1, if we achieve what? Level 1. Sorry, I beg your pardon. If we achieve level 4, we achieve level 3. If we achieve level 3, we achieve level 2. If we achieve level 2, we achieve level 1. So what we do in performance pyramid is that we set the objectives right from the start, from level 2 to level 4. We set the objectives. Then we come reverse. From level 4 to level 2, we set the KPIs. So first the objectives are defined and then the KPIs are defined, which means if we achieve level 4 KPI like for quality, percentage internal failure, we reduce percentage internal failure, which will help us to achieve level 3 customer satisfaction, that is percentage customer satisfaction will improve. If percentage customer satisfaction will improve, sorry, I beg your pardon, percentage external failure cost. If you improve percentage external failure cost, this means this will help us to achieve level 3, percentage customer satisfaction. If we achieve percentage customer satisfaction, this will help us to improve level 2, market share will improve. And if my market share improves, I will achieve my vision. From the other side, this was example of external effectiveness. Now giving you example of internal efficiency. If you improve your wastage, that is percentage idle time goes down, this is a KPI, which means your level 3 productivity will improve, percentage productivity and efficiency will improve. If percentage productivity improves at level 3, which means it will help to improve financials, which means percentage gross profit margin, net profit margin will improve, which means your vision will be improved. See, great. So level 4 KPIs improvement achieves 3, 2 and 1. This is performance pyramid. Consider considering the hierarchy of the organization. Then a very important concept is VBM, value-based management. VBM is a concept that says that the focus should be on shareholder wealth maximization only. The only group of stakeholder that is important is shareholder. VBM says that there should be a value mindset. Always the focus should be on value creation for the shareholders. It says that the directors should always think how to create value for the shareholders. The focus should be on shareholder value creation. That's it. VBM focuses on value creation by focusing on value drivers. Think about value drivers at strategic level, at tactical level, at operational level. So how to measure if business is creating value or not? Measures like EVA will be useful. Measures like MVA, market value added, which is an accumulation of all year EVAs, will be useful. Then shareholder value analysis, which means valuation methods like P ratio method valuation, like methods, earning yield method of valuation, like free cash flows will be helpful to measure value creation. Understood? So VBM is about focusing on shareholder value creation. It says that shareholder is the ultimate priority. So how to implement VBM? Yes, to implement VBM, we need to come up with the strategies. We need to come up with the value drivers, short and long term. We need to set targets and budgets for them. And we need to tilt our reward system and performance measurement according to that. Which means if you want to create value, your measures like EVA should be there, and managers should know if they create value, if they improve EVA, if their EVA results goes up, they will be rewarded for that. So your reward system should be linked with value creation, VBM. Then activity-based management. We had a discussion earlier when we were at the area of strategic planning and control. Activity-based management focuses on managing the activities, which helps in strategic APM and operational APM. Okay? Then comes the very important thing in this area, is a one that I need to give a lot of respect, and that is performance reports. When we are evaluating the business, so we have to use performance report. Admin, can you hear me please? Performance report. It's a very massive concept, very much tested in an examination. So for evaluation, one most common thing that is tested is performance report. Now what is performance report? You will be given a report or a dashboard or a summary, and in examination you will be required to evaluate the report. Remember, there is no calculations that you have to perform in that case. You have to look at the report, a report that is a one which fulfill the needs of the board of directors. This is a summary. This is a report given to board of directors, and board evaluates and reviews the performance of the organization through this report. So what you are required to do is to check how solid, how good, how credible the report is. Now, how to evaluate a report? There is a simple tool of PALE. Look at the purpose. You have to see whether report given in the appendix fulfill the mission of the organization. Mission. Does the report reflects what is mentioned in the mission? Mission says shareholder, mission says customer, mission says employees. Does the report show something about employees, shows something about customer, shows something about shareholders? You have to check whether report fulfills, gives the message about the purpose of the organization. Just think like this. Will the board gets the idea, are we fulfilling our purpose? Are we fulfilling our mission or not? So first is you have to consider whether report fulfills the purpose of the organization mission statement. So for that, read the mission, break the mission into small parts, into small components. This is what I've done. You can see my webinars, you can see my solutions, the way I break the mission into small components. And then we measure from the report whether that report fulfills that components or not. Second, audience. The report should be according to the audience. If the audience is board of directors, the report should respect this element that yes, we are using words, we are reporting to the board of directors. So our information should be according to the board of directors. Third, information in the report should be financial and non-financial. It should not show just financial numbers. It should be according to non-financial as well, depending what the mission is. If the mission is customer based, if the mission is innovation based, you need non-financial numbers. You definitely need non-financial numbers. Plus the layout of the report. Is the report according to the audience? Is the report according to the board of directors? If you are reporting to the board, remember, it should be rounded off to the last, it should be rounded off to millions, should not be to the last digit. Is report daunting? Is report easy? Is the layout easy to understand? This is what you have to see. So PALE is the guideline, purpose, check the purpose, report fulfills the purpose. Is it according to the audience? Is it, what kind of information it includes, and the layout. Plus, the guidelines includes commentary. Does the report includes any commentary? What is commentary? Commentary summarizes the things. It gives a simple message to the reader, the board, that okay, this is the reason why we performed good. This is the reason why we performed bad. Commentary should be there in the report. You have to see whether commentary is there and is it fulfilling the purpose or not. So performance report, one of the key areas of your examination syllabus. And remember, this evaluation report should be according to examination scenario, according to the situation. You cannot learn the basic points and just write it everywhere. No, it depends on the scenario. So this is performance report, which is very crucial for evaluation. Here, I would want to give you a recap of my $1 million strategies. Sorry, my $1 million categories. Those who are my students in my normal reset or crash revision batch, they know what $1 million categories are. Through these categories, I made this model simple for you. I made this performance report simple for you. Do you agree with me or not? Category 1, theoretical explanation of the model. Category 2, you have to assess the performance of the business through ratios, financial and non-financials. Category 3, check the system of the organization, performance management and measurement system. In this, you have category 3.1 without the model, 3.2 with the model, 3.3 performance report. We check the system of the organization. We evaluate the system where we look at the KPIs, how suitable they are. We look whether the system of the organization from the eyes of balanced scorecard, building block model, performance pyramid. You all know this. This is the crucial category. Then after evaluation, we are in a position to suggest. We are in a position to recommend. Comes category 4, suggestion, improvement. Suggestion could be about the system improvement. Suggestion could be about KPIs. Suggestion could be about performance improvement as well. So category 4 is about recommendations, suggestions in order to improve category 2 performance or in order to improve category 3 systems. My students, do you know this? Say yes or no. This is a $1 million tip, $1 million technique to find out what is needed in the question. What is needed when it comes to financial, non-financial models. Okay, so I hope my revision students, the crash students, the regular students and the research students must have an idea about that. Those who don't have, they still have one chance. You can join my revision batch. You can join my crash batch. Still you are left with 15 days. 15 days. So if you're interested, I'll share the details at the end. Now let's move on towards the last section. Done. APM done. See? Now last section, professional marks. 20 professional marks will be in your examination. 10 for section A, 10 for section B. In section B, 5 for one question, 5 for the other question. Skills of communication will only be tested in section A, whereas all the 3 skills will be tested in section B. But in section A, all 4 skills will be tested. But in section B, just 3 will be tested. Communication will not be tested. What is communication? Your language, the way you communicate should be professional one. The way you write the report, the layout should be professional one. And answer what is required. This is communication. Understand to whom you are communicating and what is your role in that. Second, analysis and evaluation. Drill down. Find the facts, the reasons. Evaluation, look at the pros and cons, positives and negatives. Skepticism, you need to have a questioning attitude. Comments given by board of directors, don't rely. Use skepticism. You need to find areas where skepticism is needed. You can't rely on the management simply. Commercial acumen, your recommendation, your advices, your suggestions should be practical, should be according to the examination scenario, should be according to the needs of that industry, should consider internal company situation and external factors. You can't recommend things which are impractical, which are not possible to implement. Commercial acumen, relevance, and that is according to the business. Not just focus on numbers, financial numbers. Consider non-financial aspects like customers, competitors, market conditions. Commercial acumen means you have to consider practicalities. 20 marks of professional, 80 marks are technical. Soft skill paper is easier now if you know this. My live classes, listen. Those who are in my regular batch, my live classes, you must watch live classes. Revision reset batch, must watch live classes. Revision batch students must watch live classes because I have focused a lot on these skills by using different examination questions. My webinars focusing on these professional marks, but my live classes are crucial to understand these. So those who are part of my paid batches, my regular batch, reset batch and crash batch, you must look at the live classes to understand these easy 20 professional marks. Done. Last few minutes tips, answering technique in general, proper report format for section A, proper answer structure for section A. In section A, subheadings, use subheadings more, even for section B. Paragraphs, use of paragraphs, headings, paragraphs. The examinable verb and objects, everybody know what verb is, what objects are. Find different verbs in one requirement, find different objects, and for objects use subheadings and write those in paragraphs. No bullets. Write, find verbs and objects. Answer every object in one question. Even one requirement might have 2 objects or 3 objects. You know the way I have given you the guidance in webinars and in my sessions and videos, my portal content and live classes. Remember the word and. This and will give you the idea how many objects are in one requirement. Everybody knows what I'm saying here. $1 million strategy for section A. Read the general requirements carefully, find basic areas, go to the scenario. You know what I've mentioned. You have to find now verbs and objects while reading the scenario. You can use 2 approaches. One is exhibit-wise approach to solve the requirements, or complete scenario and then solve the requirements. The third step is you are solving the requirement either exhibit-wise, requirement exhibit, or read the entire scenario and write the answers one by one. You know what planning of answer means at step 3. I've mentioned this very clearly. Looking at the verb and the objects, the marks, how many headings, and then you plan, okay, these are the approximate distribution of the marks, and then you write. And write the answer. Okay? So, this is for section A and B both. But the only difference here is for section A, one thing. The only difference is for section A, you can use exhibit-wise approach or reading of the entire scenario. But for section B, only one approach, that is read the entire scenario and then solve it. But for section A, you can use exhibit-wise approach or the entire scenario reading. Everybody knows this is what I've covered in my webinars, in my classes as well. So I hope this is clear to all of you. Now, guys, those who still want to be part of my revision batch, still they have chance. They can WhatsApp at this number to our sales support team. I think the number is not visible. Let me write here. Again, you can WhatsApp at this number if you want to be part of the revision batch. Now, why I'm saying revision batch is important is because it includes live classes, recorded content, plus it includes important topics that are important for December 22 attempt, the recorded content of that. The most important is mocks, which is part of that. 2 mocks are part of the revision batch. One will be live mock. We'll mark the mock, give you the feedback, and live debrief I will conduct. After that, there will be a complimentary mock with recorded debrief. So this revision batch includes mocks, very important for ACCA examination success. It gives you the rehearsal, plus recorded content of live classes and important areas. Interested students, those who are not part of my current normal batch, reset batch or crash batch, they can come into this revision batch. Those who are already part of these batches, don't worry, mocks are there for you. Now, mocks, very important. Note down the date, 26th of November. 26th of November, mock will be held live. Today is 19th. I have shared my plans with you people. Now those students who are not the paid ones, who took my webinar, so you are done with 2 days of live webinar, 3 days of my September webinar. Today is the grand revision. Now you people, whatever you have learned, yes, you practice, and once you practice, you compare your answer with examiner answer and examiner report. With examiner answer, examiner report, and do like this. Those who are part of my paid batch, guys, you need to cover the things according to the plans that I've shared with you people. Before 26th, be ready. I want students to be giving mock maximum. So you have 1 week's time. Be ready for mock and treat mock as if it's your final exam. So for you, exam is 26th, not 7th. Mock is the real exam day. Okay? Okay. So I hope this is clear to all of you. Now, guys, please, can you share your feedback? How was this grand revision today? Was it effective, useful? And the way I linked up the things, please share your feedbacks in the comment section. I want people to share their feedbacks, how useful this is. Will this boost up your confidence? The links, entire APM in 3 hours. I am sure if you watch this before your examination, before the day of examination, you will definitely be very confident. Please do give your feedbacks in the comment section that how useful this revision is. Happy? It took time, it was effort taking definitely, but I did my best to cover the things, and I hope this will be a confidence booster for you. I hope this will help you to improve your success. Stay positive, be positive, give your best, follow my guidelines. Mock is in 26th. Those who want to, okay, one more option. Those students who are not part of my revision batch and they don't want to take revision batch, they can only buy the mock package, only mock package. We are also offering mock package. That will be just mock package where you will be doing mock, and I'll give you the feedback and you'll be part of my debrief. So there is also a mock package as well. Those who don't want to join the revision batch, they can come into mock package. Details you can get from here. If you're not part of my WhatsApp groups, please message me at this number right at the top and this number, and I will add you into my general WhatsApp groups. I hope you all are satisfied and happy. Best of luck. And yes, I will be active till the last night before the exam. So be connected with me through the groups, general and the paid ones, and follow the guidelines. Thank you very much. See you then. Take care.